If you have ever felt like your profits were being eaten away by transaction costs, you are not alone. In the investment journey, many traders realize that making a profit is difficult, but keeping that profit intact is even harder. That is why today we need to have a clear view of trading crypto on Exness and compare it with Binance. Two names that are creating a lot of debate in the trader community. When the market fluctuates every second, choosing the right trading platform is not just a choice of where to place orders. It is a strategy, a foundation, and sometimes the factor that helps you get ahead of thousands of other traders. This is the Exness Market Channel, where we provide the most useful information about trading activities on the Exness platform. We are a leading development partner of Exness. If you're new to Exness Market, make sure to hit the subscribe button to stay updated with our latest videos. If you have any questions, feel free to leave a comment below, and our team will get back to you as soon as possible. You'll find the registration guide and the latest Exness updates in the video description and pinned comment. Besides this channel, you can also visit our Exness Market website to explore more about Exness. First, we will have an overview of what makes coin trading on Exness different. When it comes to crypto trading on Exness, many traders often think of a familiar Forex environment. However, in recent years, Exness has grown strongly thanks to the crypto CFD segment. The first thing that sets Exness apart is the high leverage, which is an advantage for traders who prefer small capital but fast profit strategies. Second, the spread remains very low even when the market is volatile. Third, it offers high-speed execution with no requotes, limited slippage, and fast, reputable, transparent deposits and withdrawals. The key point to understand is that Exness does not sell physical coins but facilitates trading in the form of CFDs, which is suitable for traders who enjoy surfing the market, short-term trading, scalping, and day trading. As for Binance, it is the world's largest exchange for physical coins. Binance is the right place for traders who want to buy real coins, hold long-term, and trade spot or futures with flexible leverage, huge liquidity, and a diverse ecosystem including staking, copy trading, and launchpads. However, when it comes to trading fees, Binance is sometimes not as cheap as many imagine, especially with futures. For those who like the fast pace of the market, the entry fee is the startup cost for each trade. Understanding how each exchange charges fees will help you choose the environment that best suits your trading style. At Binance, the cost is transparent. First, its bid-ask spread is almost zero, meaning you can see that buy and sell orders are nearly the same. Binance applies a taker and maker fee model of around 0.02% to 0.05%. Its strongest point is the extremely small spread, which is sometimes almost non-existent. Entry orders are very smooth with little slippage, making it extremely suitable for scalpers who trade for 1 to 5 minutes or continuously enter and exit orders. For professional traders who profit from small price movements, a low spread alone can save a fair amount of costs. Regarding Exness, when we trade on a pro account, the commission fee is zero as all costs are included in the spread. This spread also stays stable and average. It is not too low but is never pushed too high either. You can see that the fee will be around 0.1 only. This makes for a predictable experience, especially for those who value stability. In conclusion, scalpers will lean towards Binance. If you like to surf for 1 to 5 minutes and need to enter orders extremely quickly and smoothly, Binance has a slight advantage, but for medium and long-term traders who need stability and spreads, Exness remains a choice worth considering. Next, I will discuss swap and funding fees. This is the part that many traders do not pay attention to until their account is eroded over time. The order holding fee is a silent factor that can directly affect your profits, especially if you are a swing trader or hold positions overnight. On Binance, futures funding can be a pain point. The mechanism is that every 8 hours, the system will collect or pay a funding fee. When the market is volatile due to FOMO or a one-sided trend, the funding fee can reach 0.1% to 0.5% every 8 hours. If you are holding a BTC position worth $60 for a week while the market is vibrant, there is a high chance you could lose hundreds of dollars just in funding fees. Even if your order is profitable, This is the biggest drawback when using Binance to hold long-term orders. In contrast, Exness offers a completely free swap policy, meaning zero cost. When you trade coins on Exness, you enjoy an attractive policy of no swap and no overnight fees. No matter if you hold an order for 1 day, 1 week, or 1 year, you will not be charged fees for holding a BTC position. This makes Exness a paradise for swing traders, those holding divergence or reversal orders, and traders following Elliott, Wyckoff, or large cycle strategies. Simply not having to pay funding fees helps traders save a huge amount of money compared to Binance. Exness excels in holding strategies, keeping your profits intact while Binance might erode your account through funding costs. For those who view trading as a long-term path, coin trading on Exness brings much higher financial efficiency. Next, I will compare leverage and the order liquidation mechanism, which are factors that determine a trader's survival. Leverage is always a double-edged sword that amplifies profits but can also erode accounts in seconds. When comparing transactions between Exness and Binance, we should look at how the exchange handles risks for traders. On Binance, leverage is flexible but liquidation is extremely strict. Binance allows maximum leverage of 1 to 125, but this decreases as capital increases. More importantly, the liquidation mechanism uses mark price rather than last price. This can lead to accounts being more vulnerable to liquidation during slight fluctuations when the mark price deviates. Scalpers often find it difficult to hold orders during large fluctuations because the Binance mechanism prioritizes protecting the exchange. On the other hand, Exness provides high and stable leverage with a more flexible stop-out mechanism. When trading coins on Exness, the fixed leverage for BTC is 1 to 400 and does not decrease regardless of your capital size. This provides an advantage in capital optimization, risk management, and accurate lot allocation without the limitations found on Binance. Regarding liquidation, Exness uses a stop-out level of 0%. This means you can hold an order until the last possible moment, allowing traders to sustain a deep drawdown before being closed out. For professional traders managing long-term positions, this is a powerful lifesaver and a huge advantage. After reviewing the entry fees, holding fees, spreads, commissions, leverage, and liquidation mechanisms, it is clear that there is no single best platform, only the one that best suits your style. If you are a scalper specialized in quick wins and continuous orders within a 5-minute timeframe, the low spread and fast matching of Binance is a more reasonable choice. However, if you are a swing trader holding medium or long-term positions who wants to avoid funding fees, Exness is an outstanding choice. It allows you to maximize profits by minimizing costs through free swap fees, high stable leverage, and a flexible stop-out mechanism that lets orders last longer during market fluctuations. Always remember that choosing the right platform is the first step to becoming a smart trader. And choosing the right strategy is the way to become a successful one. If you find this video helpful, please continue to support the X Markets channel by liking, subscribing, and turning on the notification bell. See you in the next videos. Would you like me to translate another guide or perhaps draft a social media post based on this content?